We've of course, raised from some pretty awesome investors, like you mentioned at FJ Labs. So, what has the fundraising journey been like, and what are some of your key fundraising learnings?
Um, so we've raised I think something like 150 million of equity, and it's amazing how just market timing makes so much of the difference. I think we're now in like maybe call it some more of a normal market. I was in VC previously, and so I feel like that was a little bit of an unfair advantage because I kind of knew exactly what they were looking for and what exactly I should be saying. And for us early on, it was really about some of the product market fit and making sure that you were delivering a really great customer experience. And so NPS is a core metric for us. We use it a lot within the organization. It's something we focus on heavily. Um, Customer feedback is super important too. We have plugins where we get in real time, like Slack notifications when a new review comes up, and that we post that to the entire company and everyone sees it. And if there's a 5 star, people are like, yay, which is nice. And if there's like, which is most of the time, I think we've got like something like 7, 8 thousand 5 star reviews, whatever. And then on the negative side, it also is an opportunity for folks like myself to chime in and like really dig into those issues. And so that was a big focus early on. We got lucky because we've got, I think we got lucky and unlucky because we were valued super high, and then the entire every VC and growth equity firm started souring on the business, and so people were questioning the business model, and with good luck, with rightfully so because of how terrible unit economics were back then. But then both ourselves and Harvana and some others have kind of fixed it and figured it out, and so now valuations are back up, and so I think we had the fortune of being, I would say, tied to a public comp that was helpful for at least determining where valuation should be and what like the pulse of the market looked like. And so we spent a lot of time with public market investors, particularly in our later rounds, and a lot of the funds, particularly in 2022 and 2023, were crossover investors. um, I would say, the kind of the key thing is about, whenever you're going in, it's emphasizing whatever competitive moat defensibility you have. Whether, I don't know, I don't know what kind of businesses people have, but to the extent there is some degree of like high defensibility, those are things that they will focus on. And then, your ability to scale and what lever you have to scale. For us, it's supply acquisition. And so if we pull that lever, then, we can, as long as you can then absorb that demand or that kind of influx of cars for us, then that translates into growth. And so that was a pretty big factor for us. But like I would say our fundraising journey has been somewhat atypical, and hopefully and just I would say influenced heavily by public markets.